Yeah, welcome again to our course, Tourism Design and Feasibility. I am Olukemi Fabolu. Come along with me as we look at the tourism business simple cash flow forecast. Demand for cash flow forecast. When a loan is sought for even the smallest of one-man travel business, it is imperative to know that those who are venturing into tourism business are faced with the prospect of having to draw up a cash flow forecast. The cash flow forecast can be intimidating for the first time. You will be able to know significance of cash flow forecast and also identify and understand simple cash flow principles. Let us proceed. Cash flow forecast is not. It is important for you to know that cash flow forecast is not a forecast of probability of business. You need to know this very well. It is not a forecast, it is not an estimate of probability of any tourism businesses. What is cash flow forecast? The cash flow forecast expresses the sums tourism business expects to receive by way of sales, business startup allowance, and so on. It also compares this inflow of money with the payments that will be made for stock, materials, overheads, equipment, and the money used to take out of the business for living expenses, usually in monthly columns. But know that this cash flow forecast is not necessarily the same as profitability. Now, let us consider activity 1. I hope you have been able to answer the question. What do you understand by cash flow forecast? We are now proceeding to the next significance of cash flow forecast. A well thought out forecast fulfills the same function as writing a well prepared business plan. It will sharpen up your ideas. A cash flow forecast is also important because it will make you aware of the effect on your bank balance of decisions that you take in your planning. For example, the amount to spend on advertising, your terms of sale, very important for cash flow, and whether or not to buy your own transport or other fixed assets, and so on. Observe when you are filling a simple cash flow form. The simple principles in that regard includes 1. Enter the more certain figures first. Make every entry in the month in which cash and checks are handed over. All entries must be inclusive of VAT, that is, value added tax, where applicable. Then start by entering those payments of which you almost certain, such as the rent in the actual month when it must be paid, then the rate for each month when they must be paid. Another one is hire purchase payments on any vehicles or machineries or any other fixed assets. Other simple principles are loan repayments on any fixed term loan you have agreed or hope to agree, wages of any regular employees, the sums you will have to draw from the business to live on. Another principle that you must observe is any other payments you expect to have to make if you know the amounts. Then also, now enter the sure regular receipts such as business top allowance payments, such as rent from any sublet. Not difficult. They are overhead payments, the amounts of which are not yet certain because the invoices have not been received. And these are For example, gas and electricity bills, telephone bills, advertising and publicity costs, fuel and other motor expenses, stationery and printing, postage and packaging, insurances, repairs and renewals, contingencies depending on the nature of the business. Cannot be predicted with any great accuracy, but if you have done your own work, you should be able to make reasonable estimates. Enter them, of course, for the months when you will have to pay them. Repairs and renewals are a special case. They are by their very nature uncertain, both as to amount and timing. Make a very good guess as to the yearly cost and divide these into 4 quarterly payments. Enter the initial receipts and payments. Those ones are for all transactions that get you started. These receipts include fixed loans from the bank, loans from family or friends, money of your own which you pay into the business account after the date of startup, and also grants. For example, capital payment for the lease, machinery and equipment, initial license fees, legal fees, installation costs, office equipment, starting costs, then advertising to launch the product. All these items are to be paid for. That the cash flow forecast is deemed to start on a specific day, usually the first of the month. Any payment made or monies received before that date must be ignored. You are writing a cash flow, not a profit and loss account. Please take note. Many of these initial costs will be paid in the first month and should be entered in the appropriate spaces for that month. Then on this note, we are considering the next class activity. Good. We've discussed what cash flow forecast is not. We said it's not a probability of business, and what it is a forecast of the business that we are venturing into concerning the cash inflow and outflow. We also consider significance of cash flow forecast. It's very, very important. It will serve as a guide when we are starting the business. Then we also looked at cash flow forecast form filling principles. We look at the principles, the simple ones, the complex ones, and also the receipt aspect and payment aspect. I will leave you with this. Giving thought to your cash flow is a very worthwhile exercise. Please take it very, very seriously. In the next topic. Bye.